Good afternoon, everyone. I'm experimenting a little bit with camera angles. I hope this is reasonably creative for everyone. Thank you for letting me experiment on you. So, I did put out early this morning a little bit more. I don't mind these being amateurish. It's authenticity. It doesn't. Is that not selling? Look, I put out a very early LinkedIn, TikTok, etc., Instagram special report around 7 a.m. saying that was a very ugly and dangerous close on the New York Stock Exchange for New York US markets in general, and the outlook wasn't good and people should pay attention. And we've seen significant follow through during the Asian session. In terms of data, though, really what we've seen at the moment so far in Asia is that I did say that inflation was going to be, I said it 6 months ago, an ongoing global wave, to the extent that we even have inflation picking up in Japan. Who would have thought? And then on top of that, we've got UK consumer confidence again collapsing. So not a good outlook there. We've certainly seen some good bounce back data in the UK recently, but with this fresh crashing of UK consumer sentiment, as we've seen in the United States, what it's done to retail sales there, seeing a contraction in retail sales in the US, US consumer confidence is at GFC levels. That's how bad it is. So the underlying fundamental situation, this whole idea of looking across the valley when in fact it's a deep ocean ahead of us of struggling with the Omicron variant. Now, I have recently been saying at least we're going to get to herd immunity within a few weeks of going back to school, because that's going to see a fresh surge all over again. And don't pay any attention to the cases, just keep an eye on hospitalizations, because most people almost understandably aren't getting tested these days. So that's why test numbers will go down. But the thing that's worrying me is the latest research out of the US, out of Europe, out of the World Health Organization, is that we're not going to achieve herd immunity after all because of the nature of Omicron, its ability to reinfect. So that's pretty sobering news, and that's only come out really in the last 24 hours from those kinds of official sources. As we know, in Australia, 70 to 90% at times of deaths are in fact double vaccinated people, which is about the proportion of vaccinated in the population. I don't understand why journalists aren't asking more challenging questions of our political leaders in that regard. But certainly I am pro-vaccination. Vaccination helps. What I'm annoyed by is this whole messaging that you get your vaccination shots and everything will be fine. That's never been the case. Very early on, if you would have seen in my reports, I said, you know, the fellow at Oxford University involved with AstraZeneca, he said very early on that herd immunity by vaccination was a myth. So the science has been in for a very long time. We're continuing to pump into our bodies, and I said I am pro-vaccination because it does help to some degree, but just remember we're continuing to pump into our bodies a vaccine for a variant that no longer exists. The variant these vaccines were designed to fight, it doesn't even exist anymore, but we're using it anyway because that's all we have. There is work being done on an Omicron vaccine, but perhaps that will come in by the time we're into another wave. Who knows? But I'm very disappointed to hear that herd immunity, all the experts now are saying we're just not going to get to, and probably nearly everyone is going to end up having experienced COVID to some degree. So that's a little bit unfortunate, but obviously this whole concept of learn to live with COVID is the central theme of most countries around the world now. So economic activity is going to pick up, but as I keep saying, to below trend. By what below trend means, if everything was normal, various economies would be growing faster than they actually are, but at least we will have positive economic growth. In the near term, though, there is a real risk of a simultaneous slowing in Europe, China and the USA, because China's already slowed significantly, continues to. The United States is slowing. We've just seen a spike in new jobless claims in the United States, and that I think is just only the very beginning of a surge in jobless claims as people really do pull back a little bit on their activities, and some people do lose jobs in the United States. So what I'm saying is simultaneous slowing across Europe, China, USA. That's not it's not an easy environment. That's a very challenging environment. In Australia, we're going to see continued below average hospitality, shopping, all those sorts of things, which is going to drag on the economy. And as China slows, there's going to be less natural demand for Australian exports at the same time that China has said publicly it will, where it can, buy any Australian product from a competitor elsewhere in the world if it can. So shopping elsewhere, I call it. So they're going shopping elsewhere as they're slowing. So it's not going to happen immediately in the Australian data, but you can expect over the next 6 to 12 to 18 months, it will begin to show up to a probably slightly worrying degree that we are exporting less to China. In terms of markets, as I said, I put out that special this morning. New York closed very, very ugly, very, very troubling, and we've seen further follow through the downside. I do believe the hidden secret of all of this current sell-off of the last few days is in fact people hedging against war. That war being between Russia and the Ukraine, it will be no small event. It will not be a short duration. It will be a significant event if it happens. President Putin is probably one of the smartest people on the planet. I've stood within 20-25 meters of him. I've seen him answer random questions from the press. He's a very, very, very smart fellow. I'm not saying he's good and I favor everything he's doing. I'm just saying he's incredibly clever. And he seems to have got the West into a situation where the West is having trouble creating a united front. He has the military forces. The West has given him carte blanche, not carte blanche, but said you can have a credit card if you go and take Ukraine militarily. We will not respond militarily. I mean, it's not a great negotiating tactic, but you will have to pay a big price economically. So he's just thinking, okay, I'll put that on my credit card. It's not that simple and it's not laughable. Hopefully he stays out of the Ukraine, but he's now in a position where he could get NATO to give him an awful lot of assurances they wouldn't previously had the ilk to do. And if something happens with Ukraine, there's going to be a flow-through effect to Europe. And in Europe, European shoppers will become more cautious, but certainly in terms of supply of energy from Russia, especially gas, of course, could become problematic in terms of on the price front. And so we could have even greater inflation in Europe as people become more cautious. So we are going into what is a very difficult and complex matrix of economic downturn signals. We really are all around the world. And Australia will not be immune to that, and it's not immune to its own domestic situation. So when equity markets start falling from historic highs, all-time historic highs, on extreme valuations, and then you have these kind of economic and global macro strategic events unfolding, that is a reason to be cautious about your equity portfolio at the moment. Now, I'm not being negative. I'm trying to see the positive here, that you can actually hedge your portfolio. You don't have to just be a victim of the market. Too many traders and investors, when the market goes up, they think they're so very clever. And when the market goes down, oh, it's not my fault, it's the market's fault. Well, no, that's not true. You do have the capacity to respond. There are all sorts of financial instruments available to the retail investor now to hedge your exposure a little bit. Now, I'm not saying you go out and you panic sell everything. I'm just saying you need to be aware and take into account for your own circumstances if you should be watching this a little bit closely. I do think there is risk that could perpetuate for 3, 6, 12, 18 months. What if it perpetuates for 3 to 6 years in terms of a consolidation, big consolidation correction period from these historic highs of high valuations in a below economic trend growth period? For instance, it took the Dow Jones 25 years to get back to where it was when it fell in 1929. So these things can take time, and you should consider them. And again, I'm not saying rush out and sell everything. I'm saying just stop, have a rethink over the weekend about your exposure. If you've got an equity portfolio, if you've got a property portfolio, you have done remarkably well. Do you need to continue to take risk when the world is taking the kind of form it is currently taking? And in the price action of markets, we're already seeing significant downside moves. And I think what we've seen so far is only the tip of the iceberg. Great little pun here. Only the tip of the iceberg in how quickly this market could slip away. So, you know, and there's always the chance I'm wrong, but I only ever say to people what I think is the real risk direction. You know, I got hate mail 2009 to 2012 for being bullish. That's how bearish everyone else was. And I was extremely bullish all through that period from March 2009, 2 days after the absolute low. So it's not like I'm one of those people who's always saying the market is going to crash. I'm not one of those people who's always saying the end of the world is coming. You know, I had a 10-year period of saying it's going to be the most fabulous bull market in history when no one believed me. So, you know, if you don't know me long term, I can be bullish. I just call it the way I see it. And I always see opportunity in market direction, whichever direction it is going in. So I wish you well in your management of your exposures and the decisions you make. But please be aware there are fundamental. I haven't even mentioned. Well, I did mention inflation. Inflation's running away, and it's not just that central banks will raise interest rates. Inflation is bad for economic growth over the long term. The reason, I won't say it again, I've said it so many times before, but okay, quickly. The reason earnings and inflation went up at the same time was the inflation was generated by freedom of pricing, which meant higher profit margins. So you got higher earnings at the same time you got higher inflation. What's going to happen is the earnings are going to slow down, the inflation's going to keep going because we're now in a wages inflation spiral in the USA. So there's tough economic challenges aplenty before we even get the possibility of some sort of conflict, Russia-Ukraine. Now, Putin, as I was going to conclude, is in the position of where he could just hold now and pull back 10-20% of his troops, and it would almost be like a relief rally in the market when the worst thing doesn't happen. Putin would actually get a relief a run of emotion around the world of liking him perhaps a little more because he decided to do the right thing, but he will only do that if he's gained a lot of assurances, as I said, that wouldn't normally be given by NATO and the US. So we'll see what happens there. You know, there is a spirit of thinking in Russia that Ukraine should be part of the USSR. They should never have allowed the USSR to collapse in the first place. And certainly Putin would write himself into the history books. He already has, but he would further write himself into the Russian history books should he regain Ukraine. And you have to remember there's a lot of Russian-speaking people in Ukraine, and it's not as if the entire Ukrainian population is against Russia. I'm not saying that makes it okay. I'm just explaining the background nuances there that you don't often read in the media. So we'll see what happens. I think it is a real risk that he does move into the Ukraine. I hope he doesn't, even if it's just for the sake of the poor soldiers on both sides. So we'll see what happens. But in terms of the stock market itself, and if all of a sudden there was peace there, you could see a relief rally in stocks. But until that point, I think you've got to highlight and be aware that the risk is very much to the downside at the moment. It's for the downside in the euro, downside in the Australian dollar, upside in the US dollar, upside in gold, upside in oil, and of course, downside in equities. And just be mindful, this is something that could be developed into something far bigger than what we've already seen. We've already seen a big move to the downside in stocks. That could be small compared to what is coming. And I think it's well worth mentioning to you. I hope you have a very good rest of Friday afternoon. I hope you get this reasonably quickly, and I hope you have a very good weekend. I will be back on Monday. If anything spectacular happens overnight, then of course I will do a weekend special for you. But I really think, you know, we have to remember life's all about contributing. That's where happiness comes from. So let's all try and make the world a better place and be careful, not fearful, but careful. And hopefully things just gradually do get better for everyone. Have a great weekend. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.